Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Solana and its token Sol. None of the content is financial advice. Right now, the price of Sol is coming in at around $206. That represents a price from the Fibonacci levels drawn from the November 2021 high from the last market cycle to the 2022 lows to about less than $8. So from those Fibonacci levels perspective, the price is coming in at around 0.786 or at around $206. Since the March-April 2025 drop, when the price found support from the 0.382 level, it rallied back to the 0.786. Now the next target, if there is a continued bullish momentum, is the $260. That's the previous all-time high from the last market cycle. This time around, the price did wick higher to $296 at early January, early to mid January 2025. Haven't seen that kind of a bullishness since then. All in all, if there is a new all-time high for this cycle, that 1.618 from the Fibonacci levels is at around $417. So that's a key target to look for. Coming back to our own website, cryptoweeklies.com, all of the charts from here on are available for free. They get updated every day and react to the latest price action. We'll start with the machine learning based or AI based price forecast. Then we'll go to the CAGR or compound annual growth rate based retirement model, and so on. We'll discuss regression and the estimated bull run targets as well. So starting with the machine learning based price forecast, this is the price action of Sol at a weekly average since April 2020, essentially since the prices for Sol were being tracked. Instead of the candles, we look at the weekly average price, train the machine learning model on those weekly average price using statistical measures such as standard deviation based confidence level, the 1 standard deviation or 68 percentile bull case, the 2 standard deviation or 95 percentile bull case, and the 99.7 or 3 standard deviation bull case for Sol, and individual machine learning models such as seasonal ARIMA, LSTM, and XGBoost to inform what theoretically could be the price action forecast using those techniques for Sol. So right now the price action at a weekly average price is as we move towards this end of this week is at around $191. Although the price is right now $206, the weekly average price up until this point is at $191 or change. If the price action were to hit that $208 ceiling, that would be confluent with the 1 standard deviation bull case prediction for this week per the machine learning model. Moving to the end of September, that 1 standard deviation bull case for Sol is at around $270. For end of October, it's around $320. And November, early December, $345. Towards the end of December, at around $380 to $400. That's where, again, these are the weekly average price. So for example, when the weekly average price for this week, for example, is at averaging at around $191, whereas the weekly highs is at around $206. Similar story could be said about what the price action versus the reality of the weekly highs could be back in forecasted back towards the end of year 2025, where the price action at a weekly average goes to $400, whereas the eventual peak is at around 417 in that non-euphoria bull run peak mode for Sol. If we were to look for any euphoria peak for Sol, that 2 standard deviation or 2.618 level is at around $670 per the technical levels. The 2 standard deviation peak for Sol is slightly under that scenario. That is the euphoria case for Sol for this bull run per the machine learning models is between 225 for this week to towards the end of December 2025 at around $572. And if you are interested in week by week forecast, they are available in a tabular format on the bottom of the screen as well, or on the bottom of the web page. That is, these charts get updated as the price action gets dynamically factored in. So for this, for example, the euphoria ceiling for, let's say, October is at $320. The that is the non-Euphoria ceiling. The Euphoria ceiling is $436, and again the parabolic blow off top is $574. This is the 3 standard deviation column. Similarly, for end of year, that is in December 2025, the 1 standard deviation peak forecasted is 383, the Euphoria peak is 576, and the extreme parabolic bull run top again only a 0.3% chance that we get to that point is at around $826 for Sol. So again, these models help identify what is theoretical upside using statistics and machine learning based interpretation of the price action. Going to the regression based analysis, we'll cover the retirement model after that. The regression based fair value for Sol is $163. The polynomial regression model established by this pink line, the fair value that is of Sol at any given point in the bullish phases of the market cycle. The price action exceeds the or is ahead of the pink line over here, and in the bearish phases it's usually lower than the fair value, or even if you apply 1 standard deviation residual to the fair value, you get pretty much a good idea of what the undervaluation zone for Sol is. This time in April 2025, the price did come close to the green line and held it as support in early April, late March 2025. The opposite of this green line residual to the downside is the residual to the upside. Together, the price action stays about 68% or 1 standard deviation time within these bounds. Coincidentally, the 1 standard deviation ceiling for Sol is at around $320, confluent with that idea of non Euphoria bull run peak for Sol. In terms of the 2 standard deviation or the 2 standard deviation residual based overvaluation, that level is at $650, coincides well with the 2.618, but slightly more optimistic than the Euphoria case for Sol. Again, if there is a if there is a conflict between the two models, I would like to differ with the machine learning based models more than the regression models with respect to Euphoria, because moving from cycle to cycle, getting to that orange line would be much harder as the asset class kind of matures. So the Euphoria ceiling, per my interpretation of the model, is at around $572 and not the 652. If we were to look for Sol in terms of the time weighted average price based model, again this model did a great job identifying that based on this blue line, whenever the price in the bear market was below the blue line, although at $56 DCAing again with the drop to, let's say, less than $10, would have been disheartening if one were to do a lump sum at that point. Over a longer period of time, as the bear market for crypto lasts for at least a couple of quarters, if not more, with that perspective of DCA below the time weighted average price, from that $53 level to the $44 in November 2023, accumulating in that range using the time weighted average price as analysis would have been a great time, not just in 2022 but also in 2020, and both in May and also in November 2020. Right now the time weighted average price is at around $79. This blue line would be a key to observe in mid to late 2026 if the price action at that point falls close enough to the blue line, accumulating below this blue line in the depths of the bear market. Potential next bear market would be a key observation. Again, these models do react to the dynamic price action and get updated as the recent print to the price action is available. So this is as of August 24, that is today. So the time weighted average price does have an upward bias, especially since April 2024, from $50 to now about $80, about at least growth more than 50% from that point in time. So where the time weighted average price risk level is right now is at around 66%. Not as high as it was back in March of 2024 when it was 83%, or in November 2024 at 81%. So time weighted average price based risk model signaling a decent cool off in terms of the risk levels. The retirement related model for Sol, again, we'll get rid of a few lines. We'll discuss the bull case and the Uber bull case for Sol right now with respect to how the market cycle could top. If there is a non-euphoria bull run peak for this cycle between $420, if we get euphoria, that euphoria peak in 2025, that is at close to about $537. This is a very tuned out or more noise reduction based model, again not attempting to identify the actual top or bottom, but more towards compound annual growth based directionality. Let's go with the Uber bull case with the hypothesis that in the next 3 months, the next 3 years after the bear market of 2026, the price grows 45% year over year, and in the bear market of 2026 from the 2025 low, from the 2025 highs, goes to or declines about 40%. Again, this is not too dissimilar for its historical trajectory, especially as the asset class is significantly still, especially for altcoins, is significantly volatile. Looking at, let's say, Sol performance, this is Bitcoin performance in 2021. Sol did outperform Bitcoin quite a bit in 2021, but if you look at in 2022, Sol from the yearly open was down by about 93%. In 2023, up again by about 900%. In 2024, up by about 73% from the 2025 yearly open. Price has barely moved. It's up by 5% from the yearly open, but at one point it was up about 45% down from the yearly open. So accounting for these kind of yearly moves ahead of time with that tuned out approach or kind of smoothened approach, in the Uber bull case, now the price from 2025 it goes to $537 with a correction to about 40% to $322 in 2026. Again, the lows could be much lower, but again we are trying to estimate a directionality. In 2029, price going to almost $1,000. In 2033, $1,800. Forecast to 2037 at around $3,200, and 2040 at around $4,100. The number of Sol tokens needed without any staking rewards in that environment, if price goes to that $570 target, number of Sol token needed to be a Sol millionaire would be around 1,800. That number reduces in 2029 to about only 1,000 Sol. In 2033, slightly more than 550 Sol. In 2037, around 300 Sol. And in 2040, less than 250 Sol would be all it would need for if Sol were to grow at that compound annual growth rate. If you are slightly less optimistic, this 30% growth instead of 45% growth does not diminish that ROI that much, because with less growth to the upside, the 30% annual growth to the upside, the downside is also slightly better capped at around 30% decline every bear market year. Again, that's just extrapolated from other assets with similar price trajectory, such as Bitcoin and ETH. For this purpose, let's say if Sol sees a bull run peak in 2025 at around $428, drops 30% at around $300 in 2026, grows to about $650 in 2029, 1,000 in 2033, $1,500 in 2037, and $1,800 in 2040. The number of Sol needed in that environment would be, for this year to be a millionaire, at around 2,300 Sols. In 2029, around 1,500 Sol. In 2033 at around less than 1,000 Sol. In 2037 at around 650 Sol. And in 2040 around 550 Sol. So the numbers slightly vary as the trajectory varies, but again the directionality is more or the less the same. If there is more volatility to the upside, there is more volatility to the downside as well. So coming back to the risk-based models, the DCA or dollar cost average related risk as established from the regression-based fair value, this model did identify a good accumulation zone for Sol whenever the risk levels were less than 10%, You can see this model again. This is not some retroactively fitted model. This is a live model. Since about created since about October November 2023. Whenever the price with that risk levels based on the regression based proximity between the price and the regression based fair value, the regression based risk for Sol was in April was only 6%. Come July was at around 10%. Right now it's slightly higher than that, between 10 to 20% at around 17% risk. If Sol does go to that intermediate market cycle peak related risk levels between 0.3 and 0.5, let's say 0.3 and 0.6, the price forecasted in that environment for Sol is between, again right now it's much higher than that, than the $200 level. It's currently trading at around $207 level. So from 224 to let's say 337, that's the moderate risk based price forecast per the DCA model. The higher end of the of the price projections per this model is between 0.7 and 1 risk between $393 and about $533. Again, price going to and hitting the actual 1 risk is slightly less probabilistic, but with that 0.7 to 0.95 risk is between roughly speaking $400 and $433 as projected by the DCA model. As an average of the all of the models, we'll discuss an aggregated bull run target at the end. The 20-week simple moving average based risk model says risk is at around 0.41. Again, there was a confluence among all of the models around February to March time period, and we did make several videos related to Sol throughout the course of this bull run, especially as it relates to retirement model and its forecast, and covered a lot of Sol related and not just Sol on its USD pair, but as it relates to Bitcoin and ETH pair. Those forecasts are also available on the website, all available for free. You don't have to pay or sign up for it. If you like this content, please give us a like and subscribe to support the growth of this channel and stay informed. Right now, if the intermediate risk level that Sol did hit eventually in 2023 at around 0.74, in March at 0.7 of 2024, and in November 2024 at around 0.6. If that kind of environment is ahead of us, the price forecasted is between $250 for Sol and about $300 per the 20-week simple moving average based model. All in all, again, if you were to tune out the noise from any individual model and rely on all of the risk based model, that is the DCA model, time weighted average price model, and the simple moving average price model, not the technical levels or the machine learning based price forecast, the weighted risk for Sol is at around 0.37. The estimated bull run target with all of these individual risk based models going to that 0.95 risk is at around $532 for Sol, representing a reward of about 2.5x from the current price of about $206. And with that, I would like to conclude by saying the following. Right now, price at around 0.86 Fib, 786 Fib level, first area of resistance at around $270, and the first macro bull run peak at around $410, a few dollars here and there, is where the most of the area of confluence is. And the second area of confluence is between the midpoint of 1.618 and 2.618, around somewhere around 520 to $550. So that's the Euphoria case for Sol. With that, I like to conclude. Hope you liked the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.